CNBC contributor Lo Toney, Plexo Capital founding managing partner. Welcome back. It's good to see you.
Thanks for having me.
Is this going to be the beginning of something good for big tech, or this is the first warning shot for the space?
I hope it's not the first warning shot for the space, but I think it is important to really drill into Microsoft's earnings because there's going to be so much information that could portend what we see next, not only across big tech, but in some of the other areas as well. Primarily what I'm focused on and what I hear our VCs and the Plexo Capital GP network focused on are three things. So looking at what Microsoft's results are with regard to the cloud, the Office 365, and maybe even Surface and some of the other hardware. And let's start with the cloud. Why is the cloud important? Well, this could be the canary in the coal mine, both for how we should think about cloud earnings for the other players as well, but then also how the enterprise is thinking about managing their spend. And so I think we're going to see some resiliency from Microsoft with regard to their cloud. And, the real telling sign is going to be all the talk in the enterprise about trying to manage to the bottom line, making adjustments to the spend, while at the same time trying to balance the need for digital transformation. So we'll be very focused on what happens with those earnings. And I think with the 365, look, Microsoft had been extremely aggressive with their sales team in bundling a lot. And now I think a lot of the IT folks are taking a much closer look at, how much do we really need? And are there areas where we can reduce cost because we're not needing all of these productivity tools that we purchased?
I feel like there's so many different variables at play right now for big tech. The pull forward from the pandemic, how much of their valuation growth was due to, and the stock growth was due to easy money from the Fed. Now we're in a more challenging environment, yet you're hearing that enterprise growth is holding up well. But then I've got Satya Nadella himself telling me the next 2 years are going to be tough, and I'm not sure as an investor what I'm supposed to make of all of that.
Right. And I think your point about easy money, that low interest rate environment that helped to provide a lot of the capital, not only in the public sector, but the private sector as well, that fueled a lot of the venture capital growth. And I think, again, we saw those pandemic tailwinds kick in, and the big tech companies didn't plan on all of the activity that was going to be generated as a result of that. And they hired extremely aggressively. And now we're seeing folks with a need to pull back. And look, let's be very clear. Any big tech company right now is also using this as an opportunity to be able to not only right-size their organization, but I think send a message around people returning back to the office, the perks that people were taking for granted, and being appreciative of the roles that they have. And so I think, when you look to what Microsoft is trying to signal, what we should see is some indication about the enterprise and how the enterprise is actually spending, as well as I think what we're also going to hear is a look towards the future from Microsoft, especially with all of the buzz around ChatGPT, the proposed continued next investment by Microsoft into that, and the integration of that AI technology into many of the different services that Microsoft provides. So they'll have to do a little bit of, pragmatic talk about what they're seeing with their core business. Probably will touch on Activision Blizzard, but then I think the glimmer of hope is going to be what's going to happen with ChatGPT and AI.